Rich Paul here with a brief market update reviewing the first quarter of 2018. As always, this is for educational purposes only and not intended as financial advice. What a wild ride 2018 has been so far. It seemed like the markets were going to continue their bullish trend in January, but we've since seen the Dow fall, 3,000 points from its high in mid-January? Today I want to talk about some of the headlines we've seen over the past quarter. First and foremost is the topic of interest rates. We'll continue to see the Federal Reserve slowly raise interest rates for the foreseeable future. The Fed raised rates once in 2015, once in 2016, and 3 more times in 2017. Most forecasts called for a total of 3 rate increases in 2018. Our new Fed Chair, Jerome Powell, said that inflation may be moving closer to the Fed's target rate. The positive view of the economy could potentially result in 4 interest rate increases in 2018. A question we're getting from our clients is, are higher interest rates good or bad? Well, for retirees holding bonds, we can't expect our bond holdings to perform as well as they did over the past 30 years with falling interest rates because bond values fall as interest rates rise. Also, for those who are taking on debt such as financing a new car or taking on a mortgage, the cost to borrow money will be more expensive. Looking longer term, however, bank accounts, CDs, and other debt instruments will pay higher rates to savers. Banks also tend to lend more freely when rates are higher because they too pay less for funds that they receive. Finally, higher interest rates generally increase the value of a country's currency. The second market headline we've seen over the past few weeks is the subject of tariffs. Now, what's a tariff? A tariff is simply a tax on imports and exports between countries. It's really too early to tell if the proposed tariffs are likely or unlikely to achieve the intended goals of pressuring countries suspected of creating market distortions from subsidies and dumping. At a minimum, these tariffs will impact those firms, industries, and regions that depend on steel and aluminum imports, which at this point is still a relatively small segment of the U.S. trade. In the meantime, China has slapped punitive tariffs on 128 categories of American goods on Monday. In fact, in retaliation, this is in retaliation of Trump's 25% and 10% on steel and aluminum tariffs, respectively. The response is considered to be fairly measured in that it only affects about 2% or about $3 billion in annual trade to China. We can hope that the tariffs will have the intended effect of getting China and other nations to the table to ultimately get a better deal for American exporters. Now, the latest salvo from Trump, the Trump administration, is threatening China with additional tariffs on some $50 billion in Chinese imports across 1,300 categories. This is everything from medicine to machine tools. In fact, none of these tariffs go into effect immediately and hopefully may never even be imposed. I think maybe this is Trump's way of playing high-stakes poker with the Chinese, and it's now their move, retaliate or capitulate. We'll have to wait this one out to see. The last headline I wanted to touch on is this topic of Facebook, as their stock is down 16% from its high in January. Almost everybody unanimously agrees Facebook is in a unique position because, well, it has everybody's information. The information isn't just status updates and pictures. It's way more than that. It's your contacts, it's your likes, it's your dislikes, it's your whole internet browsing history, and a lot more. But with the news coming to light that they've mishandled that information, people are starting to bail on the stock and, more importantly, deleting their Facebook accounts. The hashtag delete Facebook was trending on Twitter, and people like Elon Musk have even jumped on board, deleting both Tesla and SpaceX Facebook pages. This turns out to be a PR nightmare for Facebook, and it'll be interesting to see how they react over the next few months. So that's it for this brief update. All 3 of these topics will continue to be in the news and will continue, I'm sure it will continue to be a very interesting year to say the least. As always, thank you for listening in. Opinions expressed are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal.